Everybody, I'm Vince and welcome to the Remote Accountants and Traders channel. And today I wanted to do an analysis here on Costco stock. But before we get to that, here I have my disclaimer here about remote trading and investing tips. So you guys can see that right over here. You can just read that through, pause the video so you can see that. Trades involve risk, and so just be careful out there as you do your own research and your own studies in terms of what is best for your own trades. So this channel is for educational purposes only regarding trades. So today I'm going to look at Costco stock. Costco currently, guys, by the way, today's date is Monday, December 5th. It's 11:51 on Pacific Standard Time, so keep that in mind as I refer to the time. So the Costco stock currently is trading at $4.85. And guys, I brought up this screen here. This is I kept it really simple. I know a lot of people have graphs that show lines everywhere, support, resistance, you name it, trends. This is just off of Google. And so I'm going to keep it simple at first. And maybe I'll keep doing it this way. I don't know. Maybe it's better to get the other ones that show all the different lines everywhere. But right now, just keep it so where everyone can get it. You just go to Google, put in Costco stock, you pull up this chart. You'll see the ranges on here as 1 day to max. I put a 1 month time frame. And so guys, I want to take a look at this here because right now Costco is trading right over here at $4.85. What you see in the last week is that Costco itself has taken a big dip, right? Costco used to be trading at $5.39. And then a few days after, I think it was like a day after that, it was down to $5.03. And now we're all the way down, even the day after that, at $4.94. And then it's down over here on Monday at $4.85. So it's gone down consistently. So when you see a stock that goes down like that, there are two thoughts on this. The first is this a company that you are aware of, that you understand what they do? Do you feel okay owning that company? Because why is that important? Because if this were a no-name stock, for instance, like ABC Tech, back there in the 2000s, I'm kind of dating myself. Back in the 2000s, there was the dot-com bust. And so there's a lot of companies out there that we had no idea what they did. So a company like that I had no idea, if I had no idea what they did and they were going significantly down, I would be very worried. But a company like Costco, when it goes down, it looks like a bargain opportunity, right? A chance to own the stock. Now, that being said, there are a lot of different factors to look at, of course, right? The first factor to look at is to see, okay, well, yeah, it's gone down recently, but where has it gone in the last 6 months, for instance? How far has it gone down to see where, as they call it in the trading, support lines have been? So it's about the 454 range over there. It did go slightly lower over here to what does it say here? It's like 446. And so basically at 446 and 454, you can see that it is a discount from the 485 range that we're currently looking at. So basically what that's telling me is that it does have the potential to go down to those levels. Now, that being said, is that something that I can expect? Well, that's pretty far down. And when it did hit those lines, it did bounce back up. So there is kind of assurance that if Costco does go down, it's going to come right back up again, especially since it's a well-run company. I shop there. A lot of people shop there. It's always packed. So it's a company that you can at least rely on to do business in the future. And so one of the things that I like to do, and I'm going to show you this options chart over here. It's a weekly options, and I'm not going to get into what options are. I'll do another video talking more about educational purposes versus options versus owning the stock. You might have to do a little research on your own end if you don't already understand options and how they work. But for those who do, you understand that there are calls and that there are puts. And if you sell a put, basically you can get premium on that particular sell depending on where that stock is at, that you can basically collect right from the very beginning, and you will be put that stock, as they say, that's what a put means. You'll be put that stock, meaning you'll own that stock if it hits that strike price, whatever it is that you might select. So for instance, right now, as I said before, Costco is trading at $4.85. If Costco were to hit the $4.85 over here, that would basically signal that I'll be obligated to buy the stock at expiration, and I will own the shares at that price. Now, keep in mind with puts, I could put the 485 price range in there, sell this put, but it could go down even further, and I still have to buy it at that range. That's why puts are a little bit risky in that sense that it can go further down. With all investment strategies, there is risk involved, of course. And so the reason why I was taking a look at where Costco was before is because I'm particularly interested in terms of the premium we're receiving now. Now, keep in mind that Costco does have an earnings call. I'm not going to pull up over here, but Costco does have an earnings call coming up this week. Today's Monday, again, December 5th. Costco has one coming up. I think it's on the December 8th. And so I don't typically like to trade on earnings because you don't know what's going to happen, but there are a couple exceptions to that rule. The first is, has the company already kind of taking somewhat of a beating? And as I saw here before with Costco, it has. It was trading at 550, 539, and then it was trading at 503 and went all the way down to 45, what we see it currently. Now, I say that to say that it doesn't mean it can't go down further. Certainly, as we said, it can go down to 454, or as we said before, down to 446, or even below that. I mean, that's certainly in the range, right? I mean, you can break through the support line, and then the next thing you know is you're going to be out of luck. And so, but in any case, you take a look at that stock and say, well, is that typically to happen with this? And for Costco, I wouldn't expect that to happen. Again, it's speculation. I mean, all investment has some speculation involved on that, but you have to do some research in terms of understanding where it is and what you can reasonably expect. So for Costco on this, I do believe that, yes, it could go down. They could have an earnings report. Definitely, they did have a news report that came out on November 30th that said that their sales were sluggish. And so that's why that hit there. There's a reason why the stock went way down as it did. Now, granted that they already said that and they're going to have an earnings call, I do believe that the earnings call, when it does happen, that it's going to reflect that to some degree. Now, the question becomes, how much more of a hit will it be? And it really is one of those things where that's one of the reasons why I don't like to particularly place earnings calls trades, because it could go down even further. But for Costco, it's a company that I'd like to own anyway. And so with puts, the great thing is you can get premium and then own the shares. So let's do an example, right? Say that you decided to put in the 470 strike and you're selling a put and you're getting it 455 to 475, maybe 465, right? So that's going to be $465 premium that's coming towards you because you're selling a put there. And say that the stock does in fact go down to that range. Well, you'll see here that if I look at the past few times close within the 470 range, we do see several times where it hit 466, and there was one over here, 466 again, and there was one over here for 464. The stock could certainly go down to 464, as we've seen kind of in that range over there, but the 470 mark on there is pretty close to that. And again, remember, you're receiving premium on this, so your break even, if you're receiving already $400, you can already subtract the 400 from this price range. It's basically 4 minus this, and you see that at 466, around that range, you're going to have the break even, at least earning your money. Break even basically means that the money that you've spent, the money you receive for the premium on receiving that put, and the amount that the stock went down is zero. So you haven't lost any money. You just start basically at the zero range. So of course you want to maximize your profit. The best way to profit on this is to put the 470 sell a put on this for 470, receive that premium, and then the stock never hits that strike price. So therefore you receive 100% of that premium. But I'm talking about if it does go below the 470, where some of that premium is going to get eaten up, if not all of it, depending how far it goes down. But once again, though, if considering that Costco's already gone down somewhat, yes, I do believe it's going to go down more. But will it go down even further beyond the 470? That's I don't know. It's a judgment call, and I'm looking at this and I'm saying, I don't know. Since I'd like to own this stock anyway, that sure, I'll take that. I'll take, if the stock trades at 470 or even below 470, fine. I'll take the stock at that price range, get some premium, and say it goes well below that. Say it goes to 450, right? I don't mind owning Costco, but then what I can do is do covered calls. Covered calls, as everyone knows, is when you own the stock, and then you're basically saying the stock is going to go up, and you're going to say, okay, well, over time it's going to go up, and I'll place, I call it wiggle room, basically saying, okay, if it's in the instance of it's trading at 485, I'd say, okay, well, I'll give myself 5 points here and collect a little premium on that, and then work its way up, and maybe still stays at 485, and then I do the same thing the next week. So calls is a way that you can just do the opposite of the put on that and just kind of work it on the way in the other direction. So I like Costco. I think it's a solid company. I hope this has been helpful for you guys. Do your own research again. Again, I'm not asking you to make a trade. I'm not suggesting you take the trade on there. I'm just doing my own educational thoughts on this. I do have many people that come to me that ask about my thoughts on particular options, my thoughts on particular stocks, and about my philosophy on ownership. And I kind of giving you that here in this video about, making sure that I understand the company, seeing if it's taking a discount, looking at the premium. Again, we have an earnings call. I don't particularly like to do trades on earnings calls, but because of this particular one and what's happened already, I can conceive that, hey, that would be, I'd take that premium, and if it goes down even further, I'd own the shares, and being able to do covered calls on that, I'm okay with that. So that's about, it's the best way that I can describe about the comfort level. The best advice I can give about comfort level for traders is that if you, especially doing puts, if you were given the shares of that company, would you like to own that company? Of course, you don't have to wait to expiration. You can always just take the loss and get out of the trade, of course. But I'm talking about if it expires and you're put the shares, you own those shares, would you be comfortable owning those shares? And for me, for a company like Costco, the answer is yes. And so I hope that the same would be true of you, no matter what company that you were to put and you were to own those shares. And, oh, by the way, one last thing before I sign off in this video here, I was doing the weekly expiration on there. Now, with options, as everyone knows, you can pick dates further beyond that range. And there's going to be more research to be done on that. I do follow different people online. They talk about different expirations and what helps out more than others. This one over here, for simplicity purposes, I just kept it at a weekly expiration. I do like weeklies in the one sense that, at least from the sense of the stock price, I can understand that the swings, yes, they will go up and down, but they can't go up and down as far as they could if I selected it way out, right? Like if I selected January 6th and say I did a cover call at 490, well, that Costco stock could be trading at 505 or well above that, because there's a lot of time, a lot of room to grow forward, to go up. And conversely, it could go way down too as well. So you never know with the stock. But in any case, I hope this has helped you out. Again, I'll show you that disclaimer one last time on there. This is all just for educational purposes only. I'm not an expert in any sense, so just be aware of that. Be aware of the disclaimer. Invest at your own risk on there. I hope that this option strategy has helped you out to some degree. I hope you heard me okay too. I had somebody left a comment on my very first video that they couldn't hear me well. So I have a mic hooked up on this. This mic is right next to my mouth here, so hopefully you can hear me okay. And I will do more stock analysis of other companies in the if not days to come, in the weeks to come. That's why my channel, by the way, I gave you a look at that at the top over here. I'm Vince. That's me. I don't quite look like that. It's just an animation that I happen to pick out. But it's remote accountants and traders. There are members of my group who are accountants too. I have an accounting group. I'm an accountant myself. And so there are many different opportunities for accountants on my Facebook group. You can find that link to that Facebook group. I used to, there it is right there. You can see if you click on that, if you just go to my About section on my group, on my YouTube channel, you can see that link. Click there. And if you're an accountant, you can find a job over there. These jobs are not my own, by the way. That's a disclaimer on my end. These are just jobs that come to me. And so, but in any case, I like the idea of a channel that helped out people who are remote in the finance field. So I kind of have accountants and traders on there. So kind of covering both areas, because that's what I do. I do in both areas. And by the way, another disclaimer too, guys, whatever trades I will ever talk about won't be any company that I work for. So it won't be any kind of conflict of interest and things like that, or violation of the law. These are companies that I have never have worked for. So I just find the ticker symbol, as they say, in the stock, and see if it's a trade that I'd like to do, like to place. And for Costco, I know it looks really interesting. So you guys do your own research and see where you'd like to place your trades. And I hope you're doing well here today, Monday, December 5th. I know that, by the way, one last thing before I sign off, I know that 2022 has been a rough year for a lot of folks. The S&P 500, the NASDAQ, the Dow Jones. All those indexes basically have taken a brutal hit in 2022. They've rebounded somewhat here later in the year, but in the very 7 months time range over there, they took really brutal hits. So I know that a lot of traders out there, a lot of people, on investors, had found their portfolios significantly impacted with that. So that's why I think it's good to have companies like this do more analysis on this and see what can be done and see if you can have a little better trading and be able to earn a little extra income. Okay, guys, I'll cap it here. Take care, and I'll see you in the next video. Take care, guys.